look ahead to tomorrow. We started today, as usual, looking at the economic calendar. But obviously, we also knew that today was a public holiday in the U.S., the Martin Luther King Day. And usually, during public holidays, the market tends to go sideways. So we were aware of that at the beginning of the day. And also, we also had this meeting of the finance ministers in Brussels at 4 p.m. today. So with those two factors, one, the finance ministers meeting, and also the fact that the U.S. has a public holiday, we already knew that the market probably might trend sideways for the rest of the day. So with that in mind, on the market we are focused on being the euro-US dollar, we had to approach the market with care. We'll start from the beginning. So when we met at 6:45, at that time what we had here was the sideways trend from Friday. So you can see the market was trending sideways on Friday. So we had a marker there for the lowest point of the sideways trend. That was 13,314. And the high of the sideways trend was 13,456.7. So we'll just say 13,457. So the plan this morning was that due to the sideways trend of the market, you always remember the basics. You don't trade within a sideways trend. And also because we knew there's a tendency for the market to go sideways due to the fact the U.S. had a public holiday and the finance ministers meeting at 4, we're going to approach the market with caution. And like I said earlier, you know, this is the time some traders just decide to take a holiday and take a break from trading. Because since you know more often than not, the market will go sideways during a public holiday, you can use that time to go and do other things, switch off from trading, get a rest, and then that way you don't suffer burnout from trading. So you use days like this as an opportunity to take a break from trading. But if you are a hardhead, and like myself, if you're a hardhead like myself, and you want to still trade today, but you still have to approach the market with extreme caution. So like we said this morning, that if the market forms a support, then we will sell, i.e. if the market falls, tests this low and it holds, then we can probably sell below the support. If the market went up, test that high and it holds, then we can probably buy using the resistance of the market. And then we say other than that, we'll keep out of the market. But as we can see, the market broke the support. So the support there didn't hold. The market broke the support, formed a new low. The low there was 13,293. And it broke that low again, formed a new low at 13,279. And you can see broke it again, formed a new low there at 13,244. And it started to go up then. So at this point where it was making lower lows and lower highs and beginning to trend, you can say it was no longer trending sideways again from that sideways trend. So that's no longer valid. So we've got a new picture on our hands. That's a new low in the market. So again, we're waiting for that to get tested. And the market went up, as you can see, from the high there. The high there was 13,342.4. We'll just round that up to 13,343. So that's, at that point, that's now the most recent high, and that's the most recent low. And as you can see, the market has just been trending sideways since then. Now you can just see the volume is just beginning to peter out, and there's virtually no more activity in the market. So currently, our current high is at that point, 13,343. The current low is at that point. And again, you can see it's just dying away. So obviously, we didn't place any trades today. And then we'll see what happens tomorrow. Again, remember to update your spreadsheets. Let me just bring the spreadsheet up. I haven't yet started using the new one. But if you've all started using the new spreadsheet, you can always update your spreadsheet. It's always a good practice to keep an eye on what you're doing, how you're trading. And like I said, most importantly is making comments on what you've seen. So we had, we started this week with 130 pounds. So today we didn't place any trades. So we had no losses and no profits. So we're just same 130 pounds. But again, the big thing is that it was a good trading day because I stuck to the trading plan. And if you can always end your day saying that, then you will do very well. And then again, you can make a comment there that public holiday in USA, markets trended sideways. So again, it's making comments about observations you've made in the markets. So again, whatever you see, whatever you note, whatever interesting thing you find out, make a note of it. So that when you start reflecting after a couple of weeks or a couple of months of your trading, you can begin to make objective decisions and objective assessments as to what tends to happen on the market on a regular basis. Again, remember, you don't use the words never or always, but obviously if something is happening more often than not, that can have a huge impact on how you view the market and how you view your trading plan. Okay, so that's good. So let's look ahead to tomorrow. Just save that. So we've survived to trade another day by being disciplined, sticking to our plan, and just keeping out of trouble. So tomorrow, let's see what's going to happen tomorrow. Tomorrow is Tuesday, the 18th of January. Again, we're mainly focusing on the Euro-US dollar. But we can see here the consumer price index for Great Britain is due to be announced tomorrow at 9:30. And there's a whole raft of reports coming out at 9:30 from Great Britain. You also have the retail price index. So obviously that would have a huge impact on the FTSE and the pound dollar. But it could also have an impact on the Euro-US dollar, but certainly will have more of an impact on the pound dollar. And here we have at 10, the Eurozone survey of economic sentiment. That's a report of medium importance. Obviously, that might have an impact on our market, the Euro-US dollar. And then you've got the Canadian Bank interest rate decision at 2. But obviously, that has that's of no interest to us. We're not trading the Canadian dollar. And then at 2, you have the U.S. net long-term TIC flows. That's a report of medium importance that could have an impact on the market. But the ones of high importance tomorrow are the consumer price index and the Canadian rate decision. We can safely ignore the Canadian rate decision. But then report at 9:30 could have an impact on the euro-US dollar. But we'll have a look at the market tomorrow in the morning. We'll see if it's still trending sideways, and then we'll decide tomorrow morning where will be an appropriate and safe place to place our trades. Okay, any questions?